Good morning, everybody. It's Monday, September 23rd, 5:25 a.m. Central Time. Grain markets are higher this morning. December corn futures up 5 1/4 at 407. November soybeans up 12 3/4 at 1024 3/4. December Chicago wheat up 9 1/2 at 577 3/4. December Kansas City wheat up 9 3/4 at 573 3/4. December spring wheat up 7 3/4 at 615 3/4. Mackenzie, before we start, just as I predicted, Illinois won by a touchdown in Lincoln on Friday night. I hope it didn't ruin your weekend.
Just as you predicted, that's pretty good. Yeah, we had an off day, and you guys had a heck of a day. So
We had a good day, and I was admittedly super pessimistic on Friday because I've been conditioned to be that way throughout the years. But hey,
yeah.
I'll take it. All right, let's start off with the funds.
Alrighty, so the funds have decreased their net short position in the corn market by 60% since July. CFTC released weekly commitment of traders data on Friday. As of Tuesday, September 17th, large money managers were short only 144,000 contracts of corn compared to the record short of 356,000 posted in July. From the late August low of 385 to the September peak of 416, the December 24 corn contract rallied only 31 cents per bushel. Fund traders have also been covering shorts in the soybean and wheat markets. In recent weeks, farmer selling of old and new crop corn has likely kept a lid on price action.
This is pretty impressive stuff. Short covering has been the trend since that record short was posted in July. The record short in the corn market among large money managers, 356,000 contracts. They have covered 212,000 contracts worth of net shorts, and the market from trough to peak rallied 31 cents, which is very unimpressive. You would have thought perhaps that maybe the rally would be a little bit larger. I think farmer selling absolutely plays a role there. Some of the CFTC data would indicate that that's a fact. So you had old crop selling, I think, in July and August and even into September. Now you've probably got some new crops selling. So as we've talked about before, the funds have played this like a fiddle. I mean, they wrote it down, and then when the farmer had to sell old crop at the end of August, that's when the funds kind of started to short cover or cover shorts. And it started in July, but I think that there was a lot of farmer selling and fund buying going on simultaneously. We're seeing similar stuff in the soybean and wheat markets. You look at these three contracts combined, corn, soybeans, SRW, wheat, they've covered more than 300,000 contracts worth of net shorts across those three contracts. So it's short covering has been the trend. And you look at the markets, and I'm not going to say that they're like buy dip markets, but you're seeing a lot more dip buying now than you were in previous weeks. It seemed like they had been sell rally markets if there was a rally at all. And now we've got these rallies that stick around for a little bit. The November soybean contract is closing in on those recent highs up at 1031. We're only 5 or 6 cents away early this morning. So looks a little bit better.
A storm in the Western Caribbean is likely to develop into a hurricane this week. Heavy rains are expected in the southeastern U.S. as well as parts of the southern and eastern U.S. Corn Belt. The western Corn Belt and U.S. Plains, however, are likely to remain dry. Corn and soybean harvests will push forward in many areas this week ahead of the potential rains. Government projections indicate no improvement in river conditions despite the potential rain event.
So this is going to dump, supposedly, according to the forecast, a whole bunch of rain over the southeast and even into parts of the eastern and southern Corn Belt. Now, the last time we had one of these events, the rains kind of fizzled out before they really got into the Corn Belt, and they didn't get nearly as far north as what had been projected. So I think that these tropical storms / hurricane events are kind of tough to predict when it comes to precipitation and exactly how much and how far north it will go. As Mackenzie mentioned, the river levels are going to stay low. The projection is that we're going to be 9 feet below normal at Memphis or more than that during the next week or so. So no improvement, and that's restrictive when it comes to exports. Soybeans in particular is probably our problem right now.
So if you guys have not checked out our premium content, you sure need to do so. Can you tell me about last week's premium videos, Joe?
Steve Johnson was on Thursday last week. We did a margin protection mailbag. So if you're going to sign up for margin protection, you have 7 days to do so. I believe, I think the 30th is the last day you can sign up. And it's kind of misunderstood. So we took questions from subscribers. This is a 45-minute video. We covered just about every base you could cover when it comes to margin protection. So if you guys are interested, but you still have some questions, this would be a really good video to check out. We also included a lot of the write-ups that Steve has done over the years on margin protection, which is really great stuff from Iowa State. If you guys want to see that video along with all the other premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email, which is a grain market newsletter, every single business day at 5 a.m. Central Time. It includes all the news, ton of graphics, charts, all of my cash grain marketing recommendations, and then our 6 most recent premium videos are included every morning. Give that deal a shot today, guys.
Brazilian soybean planting is lagging behind last season's pace. According to Safras and Mercado, only 0.5% of the estimated soybean acres for the 24-25 season have been planted, compared to 1.6% last year. The historic average for the time period is 1.5% planted. Planting has been inhibited due to hot and dry conditions that have caused low soil moisture. However, some weather models call for rains in Mato Grosso later this week.
Yeah, so the Euro model suggests that you're going to see rain in Mato Grosso on Wednesday, Thursday is when the rain's going to come back. And it's not super widespread, but this is perhaps indicative of the trend that you may see as we move into October. The GFS, interestingly enough, is not as aggressive with the rain. So you've got a little bit of divergence in the models here. This extended Euro that goes out through the end of October is wet. And I think both of the models are favoring like normal to above normal precipitation in October, which means you're returning to the wet season. So if you're looking for a reason why are the beans up this morning, I don't think it's a weather thing, because it looks like, to me, looks like the rains are coming back this week.
The U.S. is proposing a ban on Chinese and Russian smart car technology. The ban would apply to the use and testing of autonomous driving systems as well as vehicle communication systems. The goal of the proposal is to prevent China or Russia from using software to hack or track vehicles. Some Chinese automakers may be barred from selling in the U.S. if their vehicles are connected through their infotainment systems. The ban will also give U.S. automakers time to develop their own supply chain for connected vehicles. The ban is expected to take effect in January.
Gosh, lots of headlines about Biden and the administration being tough on China. We've got this coming Friday is when all these new tariff hikes are going to go into effect. It's the 27th, and the EVs are the big one. We're going to hike tariffs on Chinese EVs by, they're going to go up to 100%. A lot of items are going like from 30 up to 60. We have yet to see anything from China in terms of retaliation, although I fear that we may see something. China said we're going to regret, or it's going to backfire on us, whatever. I don't know, but just be prepared for the idea that there could be some sort of retaliatory measure from China announced, maybe this week, maybe it's next week after we hike the tariffs, but a lot of trade warish type stuff going on here.
We had a cattle on feed report come out on Friday. Cattle on feed as of September 1st were reported at 101% of year-ago levels. That was in line with pre-report estimates. The September cattle on feed inventory was the 4th highest on record for the month. Placements in August were reported at 99% of year-ago levels, steady with pre-report estimates. Marketings last month came in at 96% of year-ago levels, also in line with pre-report estimates. The report is considered neutral since the data was reported as anticipated. Nothing special with this report.
This is about as neutral as I've ever seen. They even got the placements number right, which is very, very rare. To look at a couple of cattle charts here, it looks to me, I mean, very loosely, that the long-term uptrend remains intact. You could pull up some daily charts and maybe it doesn't look as good, but it still looks like a bull market to me. Feeder cattle look the same way. I mean, you have your ups and downs, but bigger picture, since your lows associated with COVID that were posted in 2020, I mean, I would probably still argue that you're in bull market territory. Short term, maybe some of the indicators have changed, but still looks all right, big picture.
We had a flash sale of soybeans on Friday. U.S. exporters sold 4 million bushels of soybeans to China for delivery during the 24-25 marketing year. U.S. soybean export commitments for the current marketing year are the second worst in the last 10 years.
Yeah, the flash sales have become more frequent, but we're just not quite where we need to be if we're going to hit USDA projections. And as we've discussed at length in the past, the window of opportunity for U.S. export sales and shipments is growing shorter and shorter every year because Brazil keeps getting bigger and bigger in terms of production. And we don't know what Brazil's crop's going to be. It's probably going to be bigger than last year, but that's contingent on weather, of course. What did cattle prices do last week?
So they were higher. Live cattle for the week, they were an average of $292 higher. Feeders for the week, they were an average of $452 higher. Cash cattle trade was also higher last week. In the Texas Panhandle, cattle were $2 higher at $183. In Kansas, cattle were $2 to $3 higher at $183. In Nebraska, cattle were $2 to $3 higher at $184. And then over in the Western Corn Belt, cattle were $1 to $2 $2 higher at $184 to $185. Box beef was slightly higher on Friday. Choice ended the day at $300.19. That was up 63 cents. And Select ended the day at $288.59. That was up 33 cents.
U.S. dollars marginally higher this morning. The stocks are up a little bit. The S&P's up 10. The Dow Jones up 30. Bonds are off. Gold and silver about flat. Or silver's a little bit lower. Crude oil is up 27 cents in the November WTI at 71.27. Have a great week, guys. We'll talk to you on Tuesday.